Most homeowners do not understand the difference between renewing your mortgage and refinancing it. And because of that, banks and even mortgage agents use it as a trap, pushing you into products that will slow your journey. However, they will get paid a hefty commission. Today, I'm going to break down the differences, the traps that you need to avoid, and the only 4 reasons why you would consider a refinance over a renewal. So let's get started. Let's first talk about the difference between renewal and refinance. A renewal is simply continuing with your mortgage when the term ends. You don't change your mortgage amount, you don't change your amortization. The only thing that changes is your interest rate, and you would have an option of changing to the variable or fixed depending on what's on offer at the time. It's simply re-signing the mortgage documents to keep paying it down. However, refinancing means replacing your existing mortgage with a new one. Here, you can borrow more money, stretch the amortization, take a HELOC, or even change your lender. And banks love to dress up refinance as if they are helping you out. But in reality, they are locking you into more years of debt and pulling more profit out of you. Now let's talk about why renewals are almost always better. Renewal is stupid simple. Your bank sends you a letter, you sign and keep going. Let's say you take a 25-year amortization. In 5 years, they'll just offer you a letter. They'll give you a rate that's available at that time. You'll probably be able to convert your variable into a fixed or fixed to variable depending on what you choose at that time, and you renew at 20 years of amortization after 5 years of paying it down in your first term. In most cases, they'll not even ask for mortgage documents, no income documents, nothing. You'll not have to do anything. If you really want to shop around, just tell them that you have a better rate from so and so bank, and they will almost always match it. And even if they don't, moving to another lender, even if you're getting a 0.05, 0.1% better rate, is not worth the amount of time that you will spend reproducing all the documents that will be required for renewing your mortgage. And in many cases, you'll also be paying a legal fee to make the switch. That little bit of savings is not worth the hassle. But why do banks and mortgage agents push you refinancing over renewals? The first one is simple. If you renew your mortgage with the same bank, the bank does not make anything, the mortgage agent does not make anything, and only if you make a change to your mortgage can they still get a commission from the bank. The second one is that they sell you a HELOC, home equity line of credit. I made an entire video on this. The banks are able to charge you an interest. Then you also get to reset your amortization. That basically means that you paid down 5 years of mortgage from 25 years to 20 years in your first term, and then they'll say, okay, you know what, let's just extend it to 25 or 30 years, and they'll dress it up saying that you'll be paying a lot lower monthly payment every single month. But the reality is that they will put you into debt for a much longer time. Imagine you're adding 10 years to your mortgage, 5 to 10 years to your mortgage. That is 5 to 10 years of more interest on the principal that you owe to the bank. And then they love it when you have equity in the home and you are able to take that equity out, because bigger the loan, the more money they make. So always remember this. When you are refinancing your mortgage, it's a profit center for the bank and not really a benefit for you. Now, I'm not saying that refinancing is bad in all instances. There are a few situations where refinancing might make sense and it could be for you. The first one is that let's say you were with a B lender because you are self-employed and your 1-2 year term is coming up for a renewal, and now you can actually qualify for an A lender. In that instance, you can actually move from a B to an A lender. You are saving on interest rate because B lender interest rates are usually higher, and that way you are actually able to save a lot more in interest during the course of your mortgage. The second reason could be that you're turning your existing home that you're living in into a rental. Extending the amortization to 30 years here could reduce your monthly payments, which will increase your cash flow, and that is always a good thing. The third reason, and that's one of the major reasons why we help some of our clients refinance their mortgage, is that there is a personal change in circumstance. And most of the times it is that one of them is not able to work at the same capacity that they were working earlier, or they are going on maternity leave, and therefore their entire family income is going to reduce. And at that point, if you extend the amortization and change lenders, we can actually help them reduce their monthly payments to a level which is more palatable. And even for these clients, the income cut that they are taking is temporary, and when they get back to the same income level, we make a plan on how to pay off the home early. And the fourth one, and not my favorite because it's just not a pretty situation, is that you are consolidating debt. You have high interest debt, student loans, credit card balances. You have high interest debt, which can then roll up into your mortgage, which is at a much lower interest rate. And that's one of the reasons we have only done 3 or 4 of these mortgages ever, because I'm not a huge fan of this, one, and the banks are also not a huge fan of this, because most of these cases the credit is actually hit. You have missed your credit card payments for 3-4 months, and when you do that, your credit score is lower, and the banks don't love that, and therefore they don't lend the additional money to cover the debt and consolidate the debt. However, if you have been good with credit and you have a lot of credit card debt, this could be one of the strategies. Now, it's not my favorite strategy because it's a quick fix. It's a band-aid, right? You are just covering all the other debt, high interest debt, into your home, which is not a good thing. You have to pay down your home. You have to, retire mortgage and rent free. But in situations, very special situations where something has gone wrong with the finances, equity in your home can at least lower the impact that you have on a month-on-month basis. It's still a band-aid. It's not a permanent solution. The bottom line is renewals are simple, cheap, and keep you on track to pay off your home. And refinances are banks' favorite way to trap you into debt for a long time. If you are someone who is serious about financial freedom, keep it simple. Unless you are one of the 4 people that I talked about, just renew your mortgage and keep paying down your debt and be mortgage free. If this video was helpful, do make sure that you share it with a friend who is thinking of all these schemes, refinancing, renewals, and do hit the like button and the subscribe button so that more people like you are able to benefit from my videos. That's all I have for today. मिलते हैं अगली वीडियो में, तब तक के लिए बाय बाय.